and welcome to the Adjusted for Risk podcast here from the shores of Lake Tahoe. So, this is a big week for separately managed account managers as Zephyr announced the second quarter PSN Top Gun award winners this week. So, it's obviously quite the quarter, which makes winning the award even sweeter for these asset managers. So, driven by a macro backdrop that included rising interest rates, historically high inflation, fears of a looming recession, global equities fell a negative 16%, represented by the MSCI World Index during the quarter. Furthermore, the S&P 500 index officially entered a bear market during the quarter when the index fell 16% during the quarter. The bond market added to investor pain as the Bloomberg US Aggregate Index fell 4.7% during the quarter, which marked the second straight quarter in which both US equities and US bonds declined. So it's a very difficult quarter for investors trying to find a safe haven. The US equities fell sharply as investors focused on the new monetary policy regime that included the beginning of their interest rate hikes from the Federal Reserve. Investors feared that the hawkish Fed won't be able to tame inflation without triggering a recession. So no equity sector was immune to the risk-off environment during the quarter. However, the consumer staples sector and the utilities sector were relatively resilient as consumer staples fell only negative 4.62%, while utilities fell just over 5%. As for style, value stocks represented by the Russell 3000 Value Index fell 12.4%. Even though it was a bad quarter for value stocks, they still outperformed their growth counterparts, which the Russell 3000 Growth Index fell nearly 21% during the quarter. Additionally, large caps, or the Russell 1000 Index, fell 16.67% during the quarter, but they still were able to outperform small caps, while the Russell 2000 Index fell a negative 17.2%. So as you can see, it was a very tough market for equity investors, US equity investors, as the macro backdrop did not do them any favors during the quarter. With that being said, there were some strategies that performed very well. Here's just a couple of strategies that were named PSN Top Guns for the US value universe. Federated Hermes, their strategic value dividend strategy, performed relatively well. They were only down 2% for the quarter. First, Wilshire Securities Management, their US small cap value equities strategy, was only down a negative 3% for the quarter, which is quite surprising when you consider the strategy is a small cap strategy. And we just talked how large caps outperform small caps. Another one, a similar story here, is Dean Capital Management. Dean Capital Management, the small value strategy, was only down 3.5% for the quarter. Again, a testament to some stock picking abilities there, as small caps underperformed large caps, yet they were still able to perform well and be named a PSN Top Gun award winner. So it was also a tough environment for foreign markets, as again, high inflation, hawkish global central banks, ongoing Ukrainian conflict, and a potential recession all weighed on investor sentiment. The economically sensitive sectors underperformed as concerns over a possible recession increased. So, but strategies with an overweight to Chinese stocks, the MSCI China Index rose 3.5%. So those strategies with an overweight to the Chinese or the China region were rewarded as COVID-19 lockdowns were relaxed, which resulted in the region really being the only one to produce positive returns for investors. Here are a couple strategies within the PSN Top Gun's international equity universe that were named Top Gun Award winners. The Oberweis Asset Management China Opportunity Strategy had a fantastic quarter. It was up 6.5%. And again, as you could see, it was primarily China equities. Another one here is Mondrian Investment Partners Limited. Their China concentrated equity strategy. It was up over 5% for the quarter. And then finally, Morgan Stanley Investment Management's China A equity strategy was up 4.7% for the quarter. So as you can see, these international equity managers who performed very well, all focused on China equities. So for the second straight quarter, as I mentioned earlier, investors were unable to find shelter in fixed income markets. As a hawkish Fed, 40-year high inflation and rising interest rates pressured bonds again. The Fed during the quarter picked up its pace in its fight against inflation by increasing the Fed's fund rate by 50 basis points in May and 75 basis points in June, which increased concerns that quickened pace of hikes will push the US economy into a recession. The increasing concerns over economic growth helped slow the pace of negative returns heading into the quarter, although for treasuries. For example, the yield on the 10-year treasury note rose from 2.35% to 2.97%, while the 2-year yields jumped from 2.3% to 2.93%. So while yields really jumped during the quarter, as we got into quarter end, that increase or the pace of increase in yields really slowed as investors began to, their concerns increased over economic growth. So that helped slow the negative returns for bonds. Meanwhile, riskier bond asset classes like corporate bonds, the Bloomberg US Corporate Investment Grade Index fell over 7%. And more specifically, the high yield corporate bonds, represented by the ICE Bank of America US High Yield Master 2 Index, fell almost 10%. So those riskier bond asset classes suffered the most during this risk-off environment, which really isn't entirely surprising. So here's a couple names, a couple strategies that made up the PSN Top Gun's short maturity universe. The first one was Putnam Investments. So Putnam's stable value strategy was up 0.6% for the quarter. Invesco's stable value strategy up 0.4% for the quarter. And then finally, Wisdom Tree Asset Management's floating rate treasury strategy was up 0.3% for the quarter. So as you can see, again, there is a trend there that unfolded that with the large amount of volatility in the bond market, spiking yields due to concerns over inflation and higher interest rates really impacted the fixed income and bond sectors. So, stable value strategies obviously performed or relatively outperformed, and the shorter maturity products also outperformed. So with that, I would just like to send a big congratulations to all the separately managed account managers out there who are awarded PSN's Top awarded as a PSN Top Gun award winner for Q2. It was a great accomplishment when you're considering all the headwinds out there for asset managers. So congratulations and good luck in this upcoming quarter. So with that, I would like to, I think that's a good place to sign off. Again, go to a wealth of insights from 6,237 feet for additional insights from myself on Top Gun, separately managed accounts, and other investment topics that are impacting investors today. You can also find all of our other podcasts on our YouTube channel, Adjusted for Risk, as well as Spotify and your other favorite destinations for where you get your podcasts. So with that, I'm going to sign off, and I hope you all have a great rest of your week. Thank you.